Peter, welcome back.
Hey, what's up,
How are you doing?
Queen Boo? I'm good. How you doing?
Good. I'm giving myself a crash course on the volatility index. I'm just now doing it, so
Yeah,
I'm not a good student. I never have been. Okay.
I'll explain it in like plain, because it's one of those crazy things that it's just another example of how you can invest money.
Welcome once more to another webcast of Alexandra Mayers Live. And once more, I am joined by Mr. Stephen Washington of the Black Wealth Network. And today we are going to be talking about the volatility index in the stock market. I don't even think I said that right. Volatility index?
Yep, volatility index. You got it.
All right. So anyway, Steve, take it away, because I don't really know what this is. You are the expert here, but it's incredibly interesting considering that this is a very timely element considering the headlines of the news from what I saw today when I was doing my own little research trying to catch up with you. The volatility in the stock market is making major headlines right now. People are saying that the stock market will not suffer because of it. So what exactly does that mean? And what should people be investing in considering this volatile stock market?
Mm-hmm. Well, the crazy thing about it is one of the things that you should be investing in, and I'm not saying like a ton of money, but as part of your overall portfolio, is the actual volatility, the craziness itself, right? So there's this, just to explain it, there's a statistical mathematical calculation of the stocks in the S&P 500 and their options premium that creates this algorithm called the volatility index. That's as much as I know about the math of it. I have no idea how they calculate this thing, right? But the whole idea is it's an expectation of how volatile the stock market is going to be over the next year. So for example, if the volatility index is 20, that means that the stock market can go up or down by 20% over the next year, and that there's a 68% chance that that'll happen. That's just the definition of the volatility index. So right now the higher the volatility index, the more the market expects the stock market to be volatile over the next year. So you can actually, there are mutual funds that you can put money in that are tracked to the volatility index, meaning you can actually invest in stock market volatility, meaning just the variations, the up and downs of the stock market, without actually investing in the stock market itself. It's kind of weird to think about it. It is very interesting. So if you think the world is going crazy, like I do, like the president's apparently losing it, other people are crazy, Putin's crazy, Kim Jong-un is crazy. There's just a lot of uncertainty. That's why the stock market is jumping all around. Plus, the Federal Reserve and other central banks are raising interest rates. So all that is combining to make for just one day it's way up, one day it's way down. Well, you can basically invest on the fact that that's going to continue. That's the volatility index.
Well, that's really interesting to me. And when you let me know a little bit earlier today what today's webcast would be about, what clicked in my mind is, well, are all of these crazy politicians doing all of this on purpose just to increase the volatility? Are they investing, utilizing this strategy? And is everything that they're doing some sort of mass theater in order to create this pseudo chaotic effect in the world? Makes me wonder, but I have a conspiracy theorist kind of mind, but seriously, what was interesting to me about this whole thing is that when I just look at how insane everything is, it's people are becoming so desensitized to it. it's kind of like if things were to calm down, people would automatically be anticipating, things seem a little bit too quiet, something crazy is going to happen, and then bam.
Right.
So, yeah.
Well, if you want to look up the VIX, yeah, you go, you basically Google VIX. That's the VIX index. And then if you actually want to buy shares in a mutual fund based on the VIX, there's about 20 of them, but the biggest one is VXX. That's the ticker symbol. And
Okay.
I do it a little bit because it is very risky, okay? Because the VIX itself is volatile because stock market is volatile. So it can be up, it can be just like the stock market. However, the more volatile the stock market is, the more the VIX goes up. So it's a weird way of profiting from, almost like if you were a trader and you were able to quickly buy and sell. But most of us can't really do that. So by buying the VIX, you're sort of profiting off of everybody else buying and selling like crazy. That's literally
right. And that's exactly why I don't trust this current political administration, as I'm sure many people don't, because I almost feel as if a lot of these things that would cause the stock market to become volatile are orchestrated, and it makes me wonder if certain people attached to that administration have inside knowledge. Like, okay, I'm looking at a Reuters.com article that was just posted today, right? And it says the VIX reached a 2.5-year high of 50.30 on February 6th.
Yes.
Since then, it has slipped to 17.6, still well above the record low of 8.56 hit in November. Quote, fear has come down dramatically, but certainly not to the level of complacency seen in pre-correction, end quote, said Randy Frederick, Vice President of Trading and Derivatives for Charles Schwab in Austin, Texas. So, when I look at so many of these horrific things that have happened in the news that do have to do with certain products, guns, for example, right? Everything that you're talking about today does make me question what exactly is happening in the United States of America right now. Who is profiting the most from it? And is everything that's happening a reaction to the administration, or are the things happening due to actions of the administration? But that's for a whole nother webcast. But continue about the VIX, because this is wild to me.
You saw the one that really, the thing that made me want to cover this wasn't really the VIX itself, but it was the trade tariff announcements that President Trump announced yesterday, which caused the stock market to plummet that day because it scared everybody, because it was, he wants to create tariffs, which are basically taxes, literally taxes on imports. I believe it's 25% on steel and 10% on aluminum, which is pretty impactful. So a lot of it makes materials more expensive for certain manufacturers. So a lot of people sort of went bonkers. But that's an example of how you never know what something's going to come out that causes, quote, volatility, right? So the president can say something at any time that makes the stock market go boom or boom. And that's why I think having a little bit, sort of playing with the volatility index is probably a good time to do it, because who knows what's going to happen. That's where we are.
That's true. Well, it is where we are right now. This is extraordinarily interesting to me. Now, let's say that you were somebody who had money to burn, right? And none of us have money to burn, but let's just pretend, let's suspend reality, and let's say you did, right? What or how would you utilize the fluctuation in the volatility index right now to maximize your dollars, if you could?
Well, I would say that the thing you should do always is spread it out, right? So that's called diversification. So the more places you can have money, the better off you are no matter what happens, because then you have built-in offsets. Stock market's down, bond market's up, whatever. The VIX is quiet because there's nothing really going on, then all of a sudden, so there's all sorts of things. So that, to me, the more things you can spread yourself out into by knowing what's out there, basically, the better you are. That way, when certain things happen, you can sort of gravitate to that thing you think is most in favor right now. So right now is a good time to put a little money in VIX. When things are quiet, the VIX doesn't really help you that much. So it just depends. But definitely a time to be careful because there's a lot going on. Interest rates are going up. So, that's good for savings. So savings accounts, checking accounts, those are going to be positively impacted over the next year or so, year and a half, next 2 years. But that might put a little bit of pressure on stocks. So stocks, you might want to be conservative in the types of stocks you have. Participate in volatility, as you see fit, because it's out there. And we've talked about other things you can do, but yeah, spread it out because now things are cheaper and cheaper to get into. So you can do $5 here, $10 there, $20 there, $100. You don't have to have thousands of dollars to spread out.
Really good advice. Just as an update, my what's that thing called? Coin Watch, the Coin
Coin Flash app.
Yeah, the Coin Flash app. So I had my change go in there at the end of this past month, February. So I'm now a teeny tiny bit invested into the cryptocurrency. So thank you for that. And so I got that going. And my next move will be trying to get involved with that Buy the Block website because I really, really like the concept of that, especially after seeing that movie that didn't agree with me very well.
I've never known that you didn't like that movie.
Yeah. I still have to do my extensive review about that movie. That will be coming up this weekend.
Well, you weren't alone. Other people.
All right. Well, that was some pretty insightful information, Stephen. I really appreciate you coming in again to share your knowledge and whatnot with my audience and whoever comes across these webcasts. And everyone, make sure that you do follow Stephen on Twitter via Wealth Gap Net.